Other than setting up your business properly, the most important part of saving taxes in a business is maximizing your business expenses. Your business expenses. Now, you need to stop asking, is this deductible? Remember, Jack Spirko tells us your brain is a computer. So ask it, how do I make this deductible? Now, sometimes the answer is it's not, but it's still a much better question to ask because maybe you'll figure something else. So just to illustrate this point, we're going to explore a bit of a spicy example. Can a business buy a firearm and deduct it? Well, first remember the most basic part of what makes something deductible. The expense has to be ordinary, something that's common in your type of business. And it must be necessary, something that's helpful and appropriate for your business operations. That doesn't mean it has to be absolutely essential. It's just something a reasonable person in your business might use. Well, there's some incredibly easy cases where the IRS has said this is allowed. So if you are required to carry a gun as part of your job and have to buy the gun yourself for your business, then you can expense the gun. This applies to private security. This can apply to high-value couriers. It applies to bodyguards, etc. If you're in the business of buying, selling, even repairing guns, I think it's a pretty easy thing to justify buying another gun as a demonstration model, that sort of a thing. And finally, if you're a farmer or a rancher and there's any sort of a legitimate predator threat, a firearm is absolutely a legitimate security tool and a business asset, or even a necessity. It's very easy to justify and very easy to document. Don't think you're going to have any problem as long as you stay reasonable. You know, if you buy that $20,000 AR-15 to protect your 10 chickens from the coyote, that's probably not ordinary. But as long as you're reasonable, should fly just fine. Now, a bit more of a gray area, but I think very easy to justify with the right documentation. If you are a real estate agent who has to travel around, particularly to any sort of bad part of town or even, not great part of town, if you're somebody who has to travel around, particularly at night or in rough parts of town, if you own a retail shop in an area where there is crime that happens on a more than, once in a blue moon sort of scenario, or if you're anybody who deals in a very large amount of cash or valuable goods, the stereotypical diamond dealer probably has a pretty good justification, both on the value of the retail shop, but also if they got to carry around those diamonds, well, they got to be able to protect it. There's a very strong argument here that the personal safety and property protection is tied directly to your business duties. I don't think it's a stretch, but again, you're going to want to have written documentation of this, policies and risk assessments, and you're going to need to be careful what you buy. That quintessential diamond dealer, a Glock, probably fine. A 1911, probably fine. A shotgun, maybe for protection in the building, but not for carrying around. But again, some sort of an AR-15 or a sniper rifle, I think you're probably crossing the line, especially if you're doing something more than an off-the-shelf model. Now, the harder cases, business with no obvious security risk, and particularly if you have no customer contact. So if you are an online consultant buying a rifle just in case, that is not going to fly. But if you have valuable assets in your home for the business, such as, your customer data in a profitable business, there's a valid argument to this. Is it going to work? I don't know. I want to be very clear. I'm not aware of any IRS cases or court precedent specifically talking about that sort of a case either way. But I look at the rules. Is it necessary to have some sort of security to protect your business assets? Yes. Is it ordinary to buy some sort of a gun to protect your business assets? Here, again, in this kind of third harder case, the value of the business, the value of the assets, the amount of money spent on the gun is going to really matter a lot. Again, something like a simple shotgun or a handgun, or maybe even an off-the-shelf AR-15, totally fine. You're going to have a hard time justifying a sniper rifle, obviously. Document all of this stuff. If you want to go for it, go for it. But this is an area where pigs get fat and hogs get slaughtered. I would not try to buy a gun every single year in this sort of a business. I might buy a new gun every 4 to 5 years in this sort of a business. Whereas in that first case, you're in private security. I mean, you could probably justify buying 4, 5, 6, 7 guns a year if you actually use them for your work, right? Now, once you buy the gun, you can also start buying some of the other stuff regarding it. So, especially in those first two cases, training and using the gun, rifle or range time, ammunition for training purposes only, that's the type of thing you can probably write off as well. Now, in that super easy case, I think going, to the range 3, 4, 5 times a year, probably justifiable. Taking a class at Gunsight or something, I don't think they're even around anymore, but their equivalent, very justifiable. The in-between case, yeah, go to the range 3, 4 times a year, maybe pay for a course every other year, every 3 years. That hard case, I still think going to the range once, twice a year is a totally acceptable thing, but I probably wouldn't go for the training class. I definitely wouldn't do it more than once per employee. Maybe one time when someone first comes on, they have a gun, they need the safety training, but after that, you don't pay for it. Be reasonable. Again, this case is mostly a hypothetical. This is something I have some clients who do, and I have some clients who don't, and we have a long discussion about the risks and benefits of this. But again, it's more of a thought experiment. How far can we push this basic framework to make something deductible? I think you can see it is way more flexible than you might think.